Hello traders, Gary Wagner here, just about 12:30 in Honolulu, 5:30 in New York. It is Monday, January the 6th, 2020, and this is the Daily Report for Gold and Silver. Recent action which really began on Friday with the assassination of an Iranian general has really sparked gold pricing to move higher. It initially this morning put tremendous pressure on U.S. equities, but they recovered and gold came well off of its high, but still closed substantially higher at a new record above last year's high that was achieved at around 1562 to 1565. We are currently long gold at 1507. We will talk about the stop placement. We did send out a trade alert yesterday, as well as our current upside target and potential moves in gold, all on today's daily report. First, let's take a look at current pricing. Over the last 3 trading days, we have definitely seen gold prices move strongly higher, actually trading to a high yesterday of $1,590.90, but it gave up much of the gains on that day and still closed up substantially higher, up $15.30 at $1567.70. The low on the day was near the open yesterday at $1562.30, and we've talked about the high being $9 shy of $1,600 per ounce. Now, that was all accomplished with some medium tailwinds from dollar weakness, down almost 0.2% at 96.34. The other precious metals did increase in price. Silver back over $18 an ounce at $18.18. Palladium gaining about 2.16%, a net gain of $42.20, $2.10 away from $2,000 per ounce. And lastly, platinum did trade lower on the day, losing $21 and trading currently at $969.10. We did send out a trade alert yesterday, and we raised our stop. As we look at our technical studies, I will go through the rationale as to why we placed our stop where we did and what we are looking for in terms of our current exit strategy. Extremely interesting action in gold when on Friday we saw the market really trade from 1531 to close roughly at 1555, a tremendous spike in the market. This as a result of U.S. military action in Baghdad, which took out the Iranian Major General Soleimani. Now, the interesting thing is that when trading resumed in Australia on Sunday, it gapped much higher than the close. And we don't see that often. You can see this gap right here. And what is most interesting to me is that the open itself really matches almost to the dime the recent highs that came in last year when the market traded as high as about 62 to 65. And that is this top that I am highlighting right now. Now, that being said, the market ran quickly up to 1590 and changed, so about $9 away from $1,600. But then, as it moved into New York, traded back lower as short-term profit takers came into the market, pulling profits on this most recent move. Nonetheless, it closed above 1562, and that was one of the levels that we have been talking about as a potential level for resistance in the market. And what I find most interesting is the fact that although I did not believe we would see any real resistance either at 1520 and then again at 1540, we really got, and in fact, where I thought we would find some resistance, which was 1562 to 1565, the market blew right through that, came up to this high, but still closed above that. So that being said, at least currently, we have the level of 1562 to 1565 as being a level of support in the market. That, of course, could change if we get a break below this. We did send out a special trade alert yesterday recommending that all of our subscribers move their effective stop to below the highs of this particular candle. This, of course, came in on Friday. It closed at 55. That is the top of this green rectangle. So by putting it at 53, we'd have to see this market really come down and completely fill the gap before it would stop us out. So therefore, traders, my recommendation is to maintain your current long position at 1507 and to maintain your current stop at 1553. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.